What's up, investors? My name is Adam Tikerov, and in a couple of minutes you will know what is Warren Buffett's owner earnings. And if you want to learn personal finances and investing watching such short videos, please consider liking this video and subscribing to my channel so you won't lose it. I'm Russia, so let's get straight to the point. Alright, so owner's earnings is a much better representation of what a company actually receives as earnings. Owner's earnings is an advanced version of net income, and therefore it can be used to calculate the earnings per share and the PE ratio. And if you're not sure what net income, earnings per share or the PE ratio means, feel free to watch my previous videos. And here is an example. Net income is basically every single dollar that is left within a company after all the expenses are paid out. But sometimes this is not the real amount that the company might end up retaining. And this is why Warren Buffett came up with so-called owner's earnings. And its formula is net income plus amortization and depreciation plus minus other non-cash charges minus annual maintenance capital expenditures and plus minus changes in working capital. The formula might sound complicated, but I'm going to break it down. Net income can be simply found on the income statement. Depreciation and amortization can be found on the cash flow statement. Other non-cash charges can be also found on the cash flow statement. And these are all the possible charges that do not involve cash transactions, such as, for example, employee stock compensation. Then comes annual maintenance capital expenditures. Capital expenditures are located on the cash flow statement as well, but we only need that part which is related to maintenance, because capital expenditures can be divided into two parts. First, buying assets and expanding business, and second, maintaining the working condition of these assets, which is obviously essential, but it does not expand the business. You can use Bruce Greenwald's method of calculating maintenance capital expenditures, but it is not accurate and very complicated. That is why if you want to play it safe and be conservative, you can use total capital expenditures instead. And finally, changes in working capital, which is basically the difference between the changes in current assets and changes in current liabilities. The result of all these calculations will be owner's earnings, which is, according to Warren Buffett, is a much better representation of earnings that are retained within the company. You can then take this number and divide by the total number of shares outstanding to get more accurate earnings per share. And then you can use this EPS number to calculate more accurate PE ratio of a company. And these earnings per share and PE ratio that were found using owner's earnings will be most likely different from traditional earnings per share and PE ratios. Feel free to leave a comment if you have any questions left. Check my other videos if there's anything else interesting for you. Thank you so much, comrades.